Hey guys, and welcome back to our channel. In today's video, we'll be discussing what Warren Buffett looks for in annual reports. Warren Buffett is a successful businessman that is the CEO of Berkshire Hathaway. He's one of the wealthiest investors that exists in the world today. This investor takes his time to go through annual reports before considering different companies. According to Warren Buffett, the most valuable part of a yearly report is the letter from the CEO to the shareholders. This is the first part of an annual report, which is often a few pages. The letter entails the performance of the company over the past year. In reading an annual report, Warren Buffett likes to know the person running the business and what they think about the business. This letter should also contain information regarding where the business is heading in the future. Every investor should review a company's annual report. Though an annual report may be long and tedious to go through, it can tell you a lot about a company before you go ahead and invest in it. An annual report contains detailed accounting notices, figures and facts regarding the company. As an investor, you should not overlook an annual report, since it can help you figure out the company's weaknesses, strengths, and external threats. With that in mind, let us go through some of the most crucial things that investors should look for in annual reports. Mission and vision statement of the company. Warren Buffett looks for a detailed description of the company. Just like him, every investor needs to focus on the vision and mission statement of a company, since this can help one understand what the business is about. A good annual report should include a clear vision and mission statement. It should also describe the goals and values of the company. This information can give an investor a clear picture of what to expect from the company. When a business includes a clear mission statement in its annual report, it can assure potential investors that it is committed to maintaining its values and achieving its goals. Product overview. An investor should also have a thorough look at what the company makes or does. A good annual report should include detailed information regarding the products or services it offers. Investors are also interested in finding out the performance of the products over a certain duration, as well as the raw materials used. Before investing in a certain company, you should review the product overview section thoroughly. Companies worth investing in keep refreshing their products from time to time and launch new ones every year. It should also keep abreast with technological changes and strive to be better than its competitors. Warren Buffett does not only focus on the annual reports of a business he's considering investing in, but also reads the annual reports of the competitors. He does this to find good companies that have a competitive advantage over their rivals. When a company's annual report includes information regarding how it works hard to stay ahead of the competition, it gains a better chance of getting new investors. These are some of the crucial details that successful investors, such as Warren Buffett, look for. By understanding the business and its competitors, Warren can easily access its opportunities, threats, and strengths. Directors Report. This is also an important section to focus on as you go through a company's annual report. The section gives a summary of the company's key developments, as well as financial results. According to Warren Buffett, a business's annual report should include comprehensive details that any investor can understand, without communicating with the management. Before considering investing in a certain business, you should look for useful details under the director's report, such as the company's trading activities, the directors that have been serving during the year, any changes to the fixed assets, and future prospects. As an investor, you can also go through the company's director's report for the past 3 to 5 years. This can help you assess whether the company has achieved its goals over the years. Management discussion and analysis. Going through this section of the company's annual report can help you get more insights into the industry. This section describes how the company has been performing for the last 12 months. It also highlights the company's expectations for the next year. This section should focus on the financial aspects of the business. It should elaborate on what the business has managed to achieve financially over a certain period of time. By focusing on this section, an investor can understand the management better and find out the business's current financial position. Warren Buffett emphasizes the importance of transparent management. He likes seeing managers that are straightforward regarding a company's problems. A good company that is worth investing in outlines the challenges that it may be facing, rather than focusing on only the good parts of the business. One of the crucial points that an investor should look out for under this section is the SWOT analysis. Every business has weaknesses, and being honest about them is essential. Charlie Munger, Berkshire's vice chairman, shares the same thought as Warren Buffett when it comes to sharing a company's challenges and weaknesses. He says that it is rare to see an annual report that includes a phrase such as, "This is a serious problem that we've been facing and are yet to find a solution to it." Financial statements. Warren Buffett greatly advocates for the need to study companies' financial statements. Before buying stocks, he looks for consistency in a company's financial statements. According to Warren, an investor can get a clearer picture of the company's finances by going through the financial statement section on the annual report. As you focus on this section, you should look for details on profits and loss accounts, cash flow statements, balance sheet, and schedules of the financials. The balance sheet portrays the company's assets and its liability. You should also pay attention to the income statement, since it is a crucial report of the profits, expenses, and sales. By analyzing the numbers in the financial statements, an investor can assess the company's financial health. This can help one make a more informed decision on whether they should buy purchase stocks or not. You should consider investing in a company that has positive trends in cash flow, earnings, cost, and sales. Companies that gain long-term profits tend to have high gross profit margins. Warren Buffett explains that he decided to buy shares in Coca-Cola based on the information outlined in the company's annual report, rather than discussions with the management. A company such as Coca-Cola has great earnings. Warren believes that if a company's net earnings have a consistent upward trend, then the business is worth investing in. A company whose net earnings are above 20% on total revenues is worth investing in. Research shows that Coca-Cola earns 21% of the total revenues. As you pay attention to the financial statements in a company's annual report, you should also be aware of the warning signs. Some of them include declining cash balances and shrinking profit margins. The lack of being competitive enough and poor management execution often leads to such issues. After assessing companies' annual reports, you should consider investing in one that manages expenses well and has healthy balance sheets. Warren cautions against investing in companies that spend a lot on operating expenses that come from administrative costs, research costs, or interest costs on debt. To be a good investor, you should also put some effort into learning the basics of accounting. This can make it easy for you to interpret financial statements. Auditors Report. This letter from the auditor is often published with the company's annual report. As you consider investing in a company, you should look for this, since it can tell you whether its financial statements are in line with the generally accepted account principles. The auditor's report includes direct comments from auditors. You should also find out more regarding the company auditors. When a company has a clean audit report, it has the right accounting standards. As you go through the auditor's report, you can look for a statement such as this one. After our audit, we believe that the financial statements of this company present fairly and that it conforms to the accounting principles accepted in the U.S. Management and board. Just like Warren Buffett says, knowing more about the management and its team is important before investing in a business. As you go through annual reports, you should focus on this, since it can help you figure out the company's board members and senior management officers. This contains biographical information regarding them. Such individuals should have extensive experience in the industry. As you go through a company's annual report, you should focus on the most crucial aspects of the business. Just like Warren Buffett, you should try to find out what makes a certain company tick, and therefore worth investing in. Warren Buffett emphasizes the goal of going through annual reports is to understand a company and its competitors better. Just like Warren says, one should think more like a business owner than a stockholder. That's it for today's video. Have you been considering investing in a certain company? Did you pay attention to the aspects in an annual report that Warren Buffett looks for? Let us know in the comment section. Remember to like this video and subscribe to the channel for more financial videos.